To the A.J. Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, A.J., whose primary mission in life is to help you become a better investor.
Good morning, everyone, and welcome back to another episode of the A.J. Brown Show. And AJ, I feel like today we're going to need your help to become a better investor. The markets are just all over the place. I'm seeing this rally from yesterday, and the bar is gigantic. We got news coming in from overseas, and things are really heating up here.
I mean, I think a lot of investors are having a hard time understanding what's going on as well, but maybe we can make sense of it. Let's get going.
And start with yesterday, right? I mean, I was pretty busy, but then I saw an 800-point swing in the Dow and still seeing high inflation numbers. What's the story there?
Yeah, I mean, yesterday we had the CPI. Well, let's even take it a step further back. So if we take it a step further back, before this day, everything was kind of sour. PPI numbers were especially high. Those are the producer price index that we call that wholesale inflation. FOMC meeting minutes came in and they were telling us that, hey, we're going to keep tightening. So everything was on this little downturn. The CPI comes in the next day, and it's not good. The CPI comes in. Here it is right here. The month-over-month inflation is higher than expected. The year-over-year is at 8.2%. When you factor out the volatile food and energy, it's still incredibly higher and more than expected. So the first thing that happens yesterday is that the market sells off. I mean, it's just more bad news. But then something happened that caused the market to go higher, higher, higher. And your guess is as good as mine. But I almost feel like investors really want this. They have this view of having things like half full instead of half empty. And so I think they started to view these numbers as potentially a peak, like the highest it can be. And so it's got to be better from now. But I mean, you take a look at today. Today we released our retail sales. Retail sales is flat, which isn't very positive. The Federal Reserve is on a tear with selling those bonds that we keep talking about. So that's making a hit on the market. When we turn over and we take a look at the S&P 500 index, which is our way of taking a look at the market, I mean, let's zoom in a little bit. Well, I'm going to zoom into 3 months here. And so you and I were tracking all this time. We've been tracking this move here. So we've got this move here, and then we had this retracement, and then this expansion, and then this retracement. These were all what we call ideal moves, SIP, and that's because they're reaching the targets in the retracement analysis that are, give substantiation to a trend. And then we started to see this one, this orange one. This orange one is not done yet, by the way. Even though we had yesterday's very volatile bar where we started swinging down and then we we got all the way high. If we take a look at our confirming indicator, and so I'll bring that up. That's the 3 and 5 day EMA crossing. That 3 and 5 day EMA crossing hasn't crossed. And we've seen this before. We've seen where the 3 and 5 day EMA crossing kind of tease us. Let me change colors so you can see that a little bit better. They tease us with a crossing, but don't really give us a crossing. Here's one from the top side. And I'm actually thinking that yesterday was one of those things where I tell my members, the folks who subscribe to our programs, one up day or one down day does not make a trend. So I almost feel like yesterday was like an anomaly. And now today, after opening a little higher, there was a little bit of excitement from yesterday that happened after hours. We're now selling down. You can see we're selling off. I'm watching as this daily bar continues to go down. If we take a look intraday at what's happening so far, when we define up, here's a here we go. This is today, right? So when you dissect a bar, or should I say, when you dissect a day, we call that first hour of trading amateur hour. So this is amateur hour, and the reason why we call that is because a lot of folks who are on their way off to work, they check in really quick on their investments and they do a whole bunch of trading just in the morning based on whatever headlines they got in on their online newspapers and stuff, anything that they were reading at the breakfast table. So we see a lot of volatility during the first hour. Then you have the normal trading session that's usually split up in the morning and the afternoon session. And then the last hour we call professional hour, because a lot of the fund managers have to balance out their portfolio by the end of the day. They have to close their positions. And so a lot of people take the trend, if they're end of day traders, they take the trend or the sentiment of the day from the professionals in the professional hour. So if you take a look at today, amateur hour was a real sell-off, as you can see here. And then, in fact, let's zoom in even further so we can really, there we go. Amateur hour has been a real sell-off to below yesterday's close. Now the morning session is kind of stalled a little bit. I wouldn't be surprised if we go back down. I mean, all the news tells us that things are kind of sour. So I almost feel like yesterday was like just a knee-jerk reaction. And coming back to my retracement analysis, we did get Wednesday's close. Wednesday's close was lower than the beginning of our retracement, so that supports the downtrend we believe we're in. But we would really want it to go even lower, like to this 3,500. I've got it down as $3,537.17. We want to see it go below about $3,540 in order to support our ongoing thought that there is this bearish downturn happening. It's been happening, but whenever you have a downturn, man, you got to watch out for the ground, because downturns like to stop abruptly.
Yeah, and I was looking at the chart as you're plotting it, and that 3,500 sticks out to me in the S&P as a trigger point for like this short-term rally. And if we get below that, I think we start to hit some historical numbers on a year-to-year basis that scare a lot of people with a lot of management dollars under supervision. So we'll definitely keep an eye on that. The one thing that I'm curious about is how we usually compare the S&P moves to maybe the VIX. So what are we seeing on the VIX side in lieu of, this kind of big movement yesterday and retracement today? Can that help define that story for us?
I mean, as you can see in the VIX, folks are completely, we're at highs in the VIX. That's telling us that folks are completely insuring all of their positions with options. They're making sure that they have their option hedges in place, which is good for, in other words, it's a seller's market. Right now, the buyers are buying so much that if you have options to sell, then you can make a lot of money off of that.
Yeah, and that's pretty much what you and the members at Trading Trader are doing for the most part is selling options. And we've got a couple that we're going to go over.
Yeah. I just want to, so there's a psychology sip. A lot of people think that the markets are math driven, right? And what you really have to do when you're thinking about the markets, you still there?
Yep, you're good.
Oh, okay. Let me just hit this button right here. Nice. What you have to think about when you think about these markets is it's a bunch of people, right? And it's what those people are thinking about that really drives us, right? And it's not just weighted like individually, each person in the market gets their own little vote. It's more like the people who have the biggest amount of money in the markets have more votes. It's for every dollar you have in the markets that you get your vote. And you combine all of that sentiment together, and it's really more of a psychological experiment than it is a mathematical experiment. And so when I say, for instance, the bull likes to climb up the stairs, what you have to think about is when investors are thinking about investing money into stocks or anything in these markets, they're thinking, oh, I better be, this is kind of like Las Vegas. So I'm going to put my money in slowly and cautiously and watch it grow a little bit. And then maybe I'll add more. And that causes that bull to climb up the stairs very slowly. But then when there's some sort of problem on the horizon and people are worried about their investment, they're not going to take their money out as slow as they put it in. They're going to take it all out at once and then go bury it in their backyard or in between the levels of their mattress, right? Because that's how people think. That's how humans think. It's like, oh my gosh, the first sign of trouble, bail out. And so that causes the bear to jump out the window. But also, a lot of folks who have studied psychology know, when I ask you, Sip, what do you think is the number one thing that human beings are afraid of? What would come to your mind?
Death.
Okay, so a lot of people first jump to dying, but it turns out that's like 3 or 4 on the list. What's up above that? Well, one of them is, fear of public humiliation. That actually is even more scary for people than death. So people are afraid that they'll be humiliated in public. But then even above that, people have a fear of missing out. They fear that like they have to keep up with the neighbor down the street. Otherwise, they're not going to be cool. And that actually, when it's psychologically measured, is like number one. So investors have a fear that they're going to miss whatever sign it is to get in at the bottom and make that rise up. And so bear markets where the bear is climbing out the window, where the bear is falling out the window, they tend to hit the floor really hard because on the first sign of good news, FOMO kicks in and everybody starts putting their money back in. And sometimes, like we saw yesterday, there might be a false start. And I think that's actually what we saw. People are so ready to get that correct signal that they jump in too early or prematurely. But we, as observers of the market, we definitely want to pay attention to when this bear might hit the bottom. So we're using our retracement analysis. We're using the simple moving averages like the 50, the 200, the 30, and the 7 to kind of see where they're at. And we're using something called the counting method to determine a market bottom, which we talked about shows ago. We're not jumping in on just a single up bar, though. That's the, I guess, the moral of my story.
Yeah, and so we're going to go ahead and dig into some more of those strategies, those terms that you use to identify trading opportunities, options opportunities. I did want to bring up one thing because you mentioned that there's a lot of bad news. There's a lot of bad news, and I saw an interesting tweet yesterday from I believe it's one of the Bloomberg commentators, and he broke down these daily items and the amount that they've increased in the past year, right? With airlines being up to 43%, even eggs 31%, butter 27%. So like this is the realities that are coming into our everyday lives all across the country. And as bad as this is, it's still not as bad as like Europe and other parts of the world, right? But you know, these are the things.
You can't deny when you go to the grocery store or to the gas pump that stuff is happening. And we talked about it last week. The Fed they only have a certain number of tools, and their tools are very much demand side oriented. So when you got all these disruptions in supply, we've got a huge disruption in supply with what's going on in Europe, because the Ukraine and Russia are big players in both the energy and the food world. So we're in a global economy. People are like, well, we'll just grow more stuff at home. But the scoop is because everything is interconnected, even if we have more oil at home, we grow more food at home, it doesn't mean that the price is not going to go up, because it's a global price. And so those folks in Europe that are having their skirmish and it's affecting everybody else around the world, that's affecting, the supply side of what's going on our side. And sadly, our Fed, the only way the Fed can deal with it is by telling us to squash demand. And they're doing that by making our money more expensive. It's a weird scenario we're in, and it's very painful.
Yeah, well, the pain can be alleviated by implementing some of your options trading strategies that take advantage when markets go up and markets go down. And so if you're listening for the first time and you've never traded an option, or you want to learn more, or you just want to get in tuned, AJ's got a daily workshop that he provides, and he breaks it all down. He goes through some of these examples. So I'm going to go ahead and throw the link to that in the chat. We are going to take a little bit of a break. We'll go over AJ's pick of the week. We'll go over some of the member picks. And then if anyone has a question or a ticker that you want AJ to go over, feel free to drop it in the chat, and we'll be right back.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. Looks like we have a request come in. Do you want to run through that, or do you want to go through your pick of the week? And I also know that we're going to check in on a trade idea that we discussed last week. What are you feeling, AJ?
Let's save the user ones for the last segment of our show.
All right. So let's check in on Ruth, right? Because we talked about it on our little special episode last week with Coach Jay. It looked like it had a decent setup, and people want to know your thoughts this week. Is it still something that's heading in our direction?
So the beautiful part is, last week we said, hey, Ruth was coming back down, and if you had missed this opportunity earlier to get into a initial covering position, there was some opportunities at the end of last week to get into that initial covering position. And I actually got 2 or 3 messages from folks who said they followed our guidance and got into an initial covering position. And then you said, what do we have to do? We have to wait a month or so before we can do the next position. And I said, maybe a couple weeks. Well, look at this. Ruth is climbing up. It climbed up over the last 4 days to our level of resistance. Now, we don't want to sell our premium and buy our protection until the timing signal comes. But I just wanted to point out, it doesn't look like it's going to be months before we get our signal to sell our call premium and buy our protective put options. It looks like it's going to be a matter of days. And so wait for your signal. And so long as we're above this center zone, as long as we got a reversal, whether it's a reversal that's there, or it's a reversal that's a little bit lower, or it's a reversal that's even a little bit higher, doesn't matter. We just want to make sure we've hit our top. That's the time to sell your premium, buy your protection, and then you're set until the 3rd Friday of November, because that's when the premium automatically expires, and that's when we can start looking to get rid of our protective option. And if we buy our protective option up here, it's going to be at bargain basement prices, and when it comes back down, it's going to be at a premium. And so we'll just take advantage of all that extra implied volatility that we saw in the VIX that's making options expensive. this is going to make sure we profit off of that.
Yeah, and ironically, I just checked. They have their earnings that November 4th, so there might be an interesting timing play to that.
A lot of folks in the market, by the way, are excited about Q3 earnings, and Q3 earnings season is just around the corner. So we'll have to keep an eye out on that for the next couple of shows.
Most certainly. All right, wonderful. There's our recap on Ruth. So let's move on to AJ's pick of the week, and this is in the metals sector. The iShares Silver ETF, ticker symbol SLV. We don't often go into ETFs that much.
No, but I like them. ETFs, exchange traded funds. This is the silver one, so precious metals. This is specifically trying to give us an idea of the price of silver on the stock market. So, an exchange traded fund, it's not like a traditional stock, meaning we can't look at the fundamentals so much. But if you do research in the commodities market, then that plays over here. But looking at the pattern, and this one came up in our members only discussion last night. And so, looking at this particular candidate, it's got the patterns we like. And I have to tell you, because this one has been on our watch list for almost 2 decades. We've been following the silver. If I go back and I show you guys like a 2-year chart or even a 10-year chart, where each one of these bars represents a whole month of time, you can see that silver has pretty much stayed at the same price. Maybe there's 1 or 2 months of gains or 1 or 2 months of drops, but for the most part, silver just stays at the same price. And so what's nice about that is it's a beautiful candidate for selling premium. Now, there is, because silver is traded, especially this ETF is traded at all times of the day and night by all people around the world. You can see that there's a lot of after hours trading that causes silver to gap up and gap down. And that makes it a little bit more difficult for us to get our timing signals. But the pattern is there. And if we just focus on, selling premium on either side of the center zone, it doesn't look like you could go wrong on silver. And so we're getting this opportunity to buy some of this ETF. And I know a lot of folks who wouldn't mind having this ETF in their portfolio for the long term. So we're getting to a point, and we haven't gotten the confirming signal yet, but we're getting to a point where we might want to pick up some shares of the SLV. It's at a nice price. And because it's an ETF, it's got all sorts of excitement around the options. So if I go to this option expiring on the 3rd Friday of November, you can see we've got 12,121 contracts, and there's only a penny between the bid and the ask. That means it's a very active options chain. You're not going to have any problems buying and selling options for this particular security. So, it passes all of our tests for being one of those positions where you own the stock and then you just keep selling premium against it every time it hits a top. So I wanted to highlight it today, Sip, because we're about to get a signal any day now that says we're at a low in the channel and it might be time to buy some of this stock.
And it's at that sweet price point, right? Between like 15 and 20, which makes, developing these strategies fairly affordable for, a variety of these smaller accounts who want to get involved in putting on a position like this.
Absolutely. And one more thing, you'll notice that in the options chain, it's trading every 50 cents. And so you've got so much granularity. There's so much you can do strategy wise on this particular symbol. I mean, this would be a base position in my portfolio if I was somebody else.
All right, so we'll definitely keep an eye on this one. Let's go ahead and cover our user question, Maria. Thanks for tuning in, Maria. She wants to know your opinion on ADM, one of the major semiconductors, who I think's been hit pretty hard all year, as we can see with the chart you just pulled up.
Yeah, we were excited about AMD. This is Advanced Micro Devices, so they're big into the chips that go into computers. In fact, a lot of people like the AMD based computers over Intel. They've been giving Intel a run for their money. And I think, the scoop is, we're still feeling the shocks of what happened during the pandemic. So during the pandemic, we had a whole bunch of folks start to work from home. They realized that their home computers were in the crapper. And so they started buying a lot of home computers. I mean, we saw the price of computers go up because there was so much demand. And at the same time, a lot of the places that deliver those chips that go into those home computers, they were out with the virus. They were shut down because of country specific regulations and rules. And so there was this imbalance. So finally, a lot of those chip manufacturers were able to come back online and start manufacturing chips. And they had to make a choice because there's only so many of these chip manufacturers around the world right now. And so they picked these high-end chips that go into computers because there was at one point a huge demand for new computers. So they've been printing off these chips, making these chips, manufacturing these chips by the buttload. And now there's a glut. Everybody's computer's been updated. If you're in the market for a computer, this holiday season, you're going to get some of the best deals. I'm noticing on Amazon Prime deals that there are some of the best computers you can buy right now, and they're 20% off, 25% off. I would imagine during the holiday season, if you can afford one and you need one, you're going to get a great deal on a computer. But a lot of these chip manufacturers, because there's now a glut of these computers and these chips on the market, all of a sudden we're seeing them fall down. So we were quite excited about AMD. You can see I had a couple weeks ago my chart, my sideways channel, but AMD wound up falling below this second Fibonacci line that I had drawn around my channel. And so a lot of folks know that the reason why we extend our Fibonacci lines 2 series below and above our support and resistance lines is by pure statistics and pure probabilities. So the statistics say that if a price bar comes above your level of resistance or below your level of support and then reverses back into the channel, so long as it doesn't go about 25%, or if you're using, or I should say 40%, as long as it doesn't go 40% outside of the channel in either direction, the likelihood or the probability that it'll come back into the channel is very high. But the minute it goes past that 40% mark, it falls off, the probabilities fall off exponentially. So you can see here that AMD was trying, after hitting that 40% mark, to go back into the channel. But once it crashed through, investors basically lost their thoughts that AMD was going to get back into this channel and started to trade AMD in a downtrend. So depending on where you are with your premium trade, first of all, if you're not in any trade, then you're going to start looking at AMD as some sort of trend follower. You're going to try to trade the trend and you're going to use those appropriate signals. But if you were in some sort of premium trade, if we do our premium trades from both sides. So if you were in with a shorted stock or a back month put option, well, then you're pretty happy right now. Your back month put option, your shorted stock is making money. If instead you were in with a stock, you own this stock or you own some back month call options, then your protective put is in place. And hopefully your protective put is doing what we would want it to do. It's making some serious money. And if you're following at least the trading trainer strategy, you would have probably gotten stopped out of your AMD stock or your call options, leaving your put unfettered. If you weren't, get stopped out, well, then that put, the gains in that put are commensurate with the losses in the back month or the underlying symbol. So the risk stopped. So there's a bunch of different scenarios. I'm not sure where Maria is in this trade, but one of those three scenarios is playing through right now. All of them can be turned or adjusted into winning trades.
Yeah, seeing a lot of movement in this name, but I'm glad to hear that computers are going to be cheaper this holiday season.
I'm actually thinking of upgrading even again.
Hey, there we go. Let's make it a group affair, right? So let's keep moving on. So we had the next pick is from Carly in Richmond, Virginia, and she wants to take a look at Citigroup, ticker symbol C. And I believe the note here is, I have back month puts from 2 months ago. What do I do now? And just another note, they came out with earnings today, so there's a lot going on in Citi today.
Well, I'm happy because I think we featured this actually a couple months ago. And so I'm happy to hear that you're in back month puts. So as we say, there's always got to be an initial covering position. An initial covering position is what allows us to sell this premium on and on and on. So if what she's telling us is her initial covering position is something that she bought when it was at a high, back month put options, and that's great. So and when you buy them at a high, you get your back month put options fairly inexpensively. So now you can see that we are down here at this low, and I actually, on the fast MACD, I got ourselves a signal, and I might wait until Monday to make sure that this signal isn't a false positive. But I got myself a signal to go ahead and sell my put premium. So that means sell the near term at the money put. I'd be looking at the November series, and I'd be looking at maybe the 40 or 41. It depends on what the price is trading at the moment. I'd error to the side of out of the money. So I'd sell that. And let's just, as an idea, let's see how much we could get for that. So it looks like, I'm not sure how much you paid for buying those put options, but I bet it was fairly inexpensive. So what we're going to do is we're going to take a look at our November options. I see that they're trading every $2.50. If we were to trade the 40 right now and sell it, oh wow, it's going for a real nice premium. It's going for about $1.05 per option share, or $105 per contract. So you could totally, get ready to sell those puts. And then I would buy myself a protective call. I would buy myself a protective call, maybe with a strike price up here around the price of the stock when you bought the back month puts. So if the price of the stock when you bought those original puts was $52.50, I would buy my calls, because if you think about it, those $52.50 calls right now are going to be bargain basement prices. I'd go out about 3 to 6 months, because you don't want to have those decay away from time. Instead, that's going to protect your trade. So if this underlying symbol goes up, 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 and then doesn't stop, that protective option is going to kick in. But in the meantime, you're also going to be able to turn that into a second source of income, because if it does stop short and reverses back down, you can sell those at a profit. You're buying them at bargain basement prices. They're going to protect your trade, but then when it's time to sell them back, you're going to make a profit off them as well. It's kind of the unusual or differentiating thing that we do here at Trading Trainer that a lot of folks don't pay attention to.
Yeah, so great setup, Carly.
It is.
Just running through the earnings real quick. It looks like they beat across the consensus, with growth of about 2.75 quarter over quarter. So, they're seeing some improvements in their business.
And not only that, I mean, in addition, they're giving their investors nice dividends. I mean, they're in the business of processing money. And a lot of people don't get this, but when the Fed raises interest rates, banks make more money. right? Because their spread between, if they were to give a loan and the Fed interest rate was 50% or 0.5%, 50 basis points, they would give a loan at 2.5%. They always make a spread. It turns out that if the Fed raises the interest rate up to 2.5%, they raise their interest rate up to something like 5 or 6%. They wind up making a bigger chunk. So banks actually like it as far as earnings go. It makes them have a new kind of a dynamic for how they can make money.
Awesome. So thanks for the pick, Carly. I think that's a great setup. Let's move on to a name that we covered a couple shows ago as kind of this staple company that has endured many market downturns, and must be local to the viewer. Here's Jake from Dearborn, Michigan, interested in a Michigan favorite, Ford, ticker symbol F.
We like Ford. We like Ford as premium traders. You pointed it out on the SLV. We like it because look how inexpensive that is. So that means that even a newbie trader who has a smaller portfolio, you could be doing some premium trades on Ford. And I like Ford too. Ford gave me a bottom signal back here and then gave us a false start. They're back down. So just like we were talking about with Ruth, if you missed the opportunity on Ruth is giving you another opportunity. And this is a famous pattern called a double bottom. Now they are coming up with earnings, and that's something you should be aware of, but earnings hasn't really affected too much Ford stock in the past. The earnings come, the earnings go, and the investors aren't really fazed by it. So keep that in your thoughts because sometimes earnings can throw us for a roll. But, this is a great time if we get this confirmation of a bottom being formed. This would be a great time to be picking up some Ford stock or buying some call options on Ford. And when I say buy call options, I want you to go out more than 8 months, and I want you to go pretty deep in the money. If you can get some options trading at parity, it makes the analysis that much better. So go deep and go far because you're going to hold on to these for a while. This is your initial covering position. And if you don't trust me, do this on paper. Use a simulator or use paper trading and follow along. What we're going to do is get into that Ford stock, and then we're going to wait for it to appreciate. And once it's done appreciating, we're going to take an income trade on it. We're going to take advantage of these high implied volatility numbers. We're going to be the seller of the options instead of the buyer. So we're going to be able to take advantage of the fact that there's a demand for options right now.
Yeah, and they're really making some breakthroughs with their EV vehicles. I keep seeing, so that's good to see them innovating on the business front. So
the lightning.
Thank you. Yeah, thank you, Jake, for tuning in and the question. Moving on to our next ticker, our next user question, and this is Janet from way over in Singapore. She wants to know about Novavax, ticker symbol NVAX. Novavax.
Vaccine manufacturer. All right. The first thing I want to do, it looks like an interesting pattern. I'm going to zoom out a little bit. This one is a new one for me. I haven't looked at it much before. It's not on my watch list. So let's take a look. All right. This is a 2-year chart where each one of the bars is a week. Here's a 10-year chart. Each one of these bars is a month. So like a typical pharmaceutical, it looks like Novavax releases a drug, and then for a couple of years it's flying high. Then they go into kind of a pause. Investors get kind of spooked. They're like, is this company ever going to do anything again? Then they release something and it goes up high again, and then it kind of comes down as that product is no longer exciting. And so that's not uncommon if you follow a lot of the pharmaceuticals. So let's now move us back into kind of this. Well, before we go 6 months, I want to just take a measurement here. So it looks like when Novavax tends to calm down, it trades somewhere around the $25 range. So if I come back to my 6-month chart and look at what's happening in the present, so Novavax is even below that. It's kind of at that range where we would believe that this thing is going to stall. You can see that this company, feast or famine, this earnings they did really well, and then all of a sudden this earnings they wound up chewing up a whole bunch of investor money. This is not a particular, Janet, this is not a company that I generally am attracted to because there's just so much volatility and uncertainty. It's almost like you have to be news driven in order to find out about Novavax. But I think that if this was a symbol, for instance, that you wanted to have in your portfolio, because maybe you want to take advantage of the next time Novavax has that pop in the long term, what you could do here is it does look like Novavax is getting ready to bottom. And so I would want to wait, and I would want to make sure that I have even some of the slowest lagging indicators confirm that there is a bottom in Novavax. And if you want to have this symbol in your portfolio, buy some of this symbol. And then every time, and I don't think it's going to be monthly, but every time you kind of have a pop, but it's not the pop that you're, when Novavax pops, it goes from $20 to $80 or even $100. So say, for instance, it only pops to $30 or $40. That would be a great opportunity for you to sell some, call premium and create a little bit of income off of this while you're waiting for the big pops. It's not the lowest hanging fruit. And so I would only say get involved with Novavax if indeed you're one of those type of investors that likes to put your money someplace and then expect the pop in the not too distant future. But it's very speculative. It's not something that's on my chart. I like to plan things out, and I like to make a constant source of income. So maybe not my favorite, but it is possible if you really want to.
Well, I appreciate trying to throw you a curveball, AJ, and getting your analysis on the fly. So
Yeah.
There is some potential there, and maybe Janet knows a little bit more about the company, and it's a way to get into a longer play using options. So thank you for that, Janet. Just wanted to remind everybody that's watching, listening for the first time, that AJ's one-on-one coaching program is booming. I mean, I'm seeing all the messages come in. I'm hearing the feedback. We had Coach Jay last week. Some of the members were, giving him good high remarks and good props. So just want to once again remind everybody that's watching, listening for the first time, that AJ does offer one-on-one coaching. So if you want to have that dedicated person there, walking you through the steps, helping answering your questions, giving you the confidence that you need to succeed as an options trader, as an investor, to put that portfolio to work, sign up, have a conversation with somebody and see if it's a good fit. It's not a good fit for everybody, but it certainly is a way to get involved if you're, still a little bit confused by what we're doing. I know with this episode 51, but there's a lot that goes in, and this is a great opportunity. So I'm going to go ahead and throw that link in the chat. AJ, what was, we had Coach Jay on last week. Did you get any feedback throughout the week from that episode?
Yeah. We had a lot of people take advantage of the promotion and get involved. And then we had a lot of applications. So when you follow that link that Sip just put into the chat, when you follow that link, it takes you to a place where we ask you just a few application questions, and it schedules a call with one of our representatives to see if you're actually a fit. We're so careful in our one-on-one coaching program to make sure that you're, it's not just you hiring us. We have to have a good fit because we're going to be working with you over the next year or more. right? And we actually bring you into the Trade With Us program, meaning you and I and the rest of us are all going to be, catching up on a daily basis on what we're trading. And you can get ideas from me. We can get ideas from each other. But in order for you to be able to be part of our little inside group, our Trade With Us program, you have to be the right fit. You have to have the right. It's not just having the portfolio to do it. And it's not just about paying us. We'd rather you not pay us and, be a good participant of the program than for you to just pay us and expect us to do all your work for you. So, yeah, we got a lot of good feedback. We got a lot of applications that were brought in, and we've got a lot of calls scheduled to talk to folks. And I hope some of you wind up getting picked to be in our program.
Yeah. And the one thing that I appreciate about it, as someone that's seen the industry evolve, it's not one of those where you're expected to sit in front of your computer all day, right? It's really, if you have a active lifestyle and you're busy, you could still implement a lot of these strategies. And that's kind of the beauty of it, but it's also kind of the advantage of utilizing these strategies, these tools to earn income, to make profit, but not stress so much about it like you might if you're sitting in front of your computer all day. Because I know a lot of people that have done that. I've done it myself. It can really
burn out.
Yeah, exactly. So the links are in the chat. Feel free to head on over there and sign up. Also in the chat, you'll find a link to AJ's daily workshop. So if you want to go and learn, today, right now, in the next 30 minutes, if you want to jump in on that, hit that link, sign up, and someone will be, you'll get an email and you'll figure out how to get in there. It's not too complicated. All right. So AJ, heading into Halloween season, right? The next 2 weeks, we're going to be gearing up. The temperature is going to be falling. We're going to be seeing more fall leaves. What should we be keeping an eye on? What are your thoughts for the next 2 weeks, going into next week, so on?
Well, so I know a lot of people are hunkering down in their everyday lives, and I like to differentiate between being an investor and my everyday life, because in my everyday life, I feel the expense in the grocery store. I feel the expense in the gas. We're not taking as many airplane rides and things like that. Totally understandable. But in the investment world, I'm the happiest little camper in the possible, because I know these strategies in order to put myself on the correct side of the equation. I know how to manipulate my IRAs so that I'm actually making money as the market is doing what it's doing. It's correcting. So I urge all of you, if you're not doing that, if you just have your money in your 401k and you're watching your grand total of, value go down because you're on the wrong side of the equation, figure out how to put yourself on the right side of the equation. There were so many opportunities, with Ruth, we've got the opportunity to start selling premium. With Ford, we have the opportunity to start getting into the initial investments. These are all fantastic trades. I'm going to be watching all of them.
So the moral of the story is, if you're seeing the pain in other areas, options are a great way to make up the difference, because there's a lot of activity in that space right now.
Absolutely.
So if you're not involved, hit that like, or check out those links that we put in the chat. If you've enjoyed the broadcast and you want to tune in some more in the future, hit that like, hit that follow, hit that subscribe button, and we will do our best to provide you with more content moving forward. Appreciate your time, AJ. Appreciate everybody tuning in. We will catch you guys next week.
That's right.
Adios.
Bye, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.